here's the CFA Institute. The exam itself, if you want to be a security analyst, you're probably going to need to get this exam. You can take part one when you're a senior in college. If you can get part one done, it will definitely open doors for you. And part one is not that difficult. Part two is a tough exam. I have my CPA. I passed the entire CPA in one try. I did not think it was that difficult of an exam. The CFA, I thought part two of the CFA was the hardest exam I've ever taken in my life. It was really, really tough. So it's not easy, but part one, I thought part one was pretty straightforward. I didn't have that much trouble with part one, but parts 2 and 3 are really tough exams. And so if you can pass it, it really looks good on a resume, especially today where college education is getting more and more watered down and companies aren't really confident how good college education is depending on one school versus another. The CFA is standardized and it's rigorous. The pass rate's only about 50%. And so if you can pass it, it definitely looks good. And getting part one, now you have to be real careful how you put it on your resume. So if you pass part one, or even if you're just a candidate, you're just going to take part one, you can put that on your resume, but you better use exactly their wording. You get yourself in a lot of trouble if you use the wrong wording. So they have the ethical part. I actually hated the ethical part, not because I'm an unethical person, but because the questions are so ridiculously impossible. I remember in part 3 of the exam, they had this ethical thing. I mean, part of it was he hired a hitman to take out one of his subordinates. I thought, well, that's unethical. So I got that run. And then we were supposed to find the other 6. And I could only find like 2 others. If they just asked me to write the entire ethical code, I could have done that because I had the whole thing memorized. And so on the ethical part, and we won't do it in this class, but probably the most important part for the ethics is they actually read their case studies. And I'll show you some of those case studies. It can get really messy, but those are the ethics. And the ethics includes the performance standards. We're not going to talk about GIPS in here. I memorized the GIPS as well. I had a mnemonic that went on like 60 something letters. I had that thing memorized. I was ready for a question. They didn't ask a single question on the GIPS in any of the parts I took. If they just said write the GIPS, I could have done it, but they didn't ask a single question on that. But they probably are asking it more and more today. So there's an ethical side. There's a quantitative methods, which I have to tell you, the quant methods part is really simple. So everything you learn basics in your stats class, that's all you need. There's no real advanced there. They supposedly are adding some Python questions, which I think is kind of interesting. On machine learning, those kind of things. I don't know what they look like. So you can see that here on F. I doubt they're too complicated, but boy, that's pretty scary, isn't it? This is the CFA and they're adding machine learning into their book. Now, there'll be an article or something you'd read, and that's probably all they're going to expect you to know. But the CFA is starting to put this stuff in there. But the rest of this should be basic stuff you had in your stats class. There's an economic side. It's pretty basic macro kind of stuff. So in the questions, I think most of them are pretty obvious, especially on the multiple choice. And economics is only in part 1, and part 1's almost all multiple choice. So you should have had all of this, your money and banking class, your macro, you take 9 hours of PICO, I guess, micro, macro, and money and banking maybe, or maybe money and banking is a finance class, isn't it? There's a professor who teaches in the EMBA, Keith Phillips. He works for the Federal Reserve. And I keep telling him, you need to teach undergraduate money and banking because he would be phenomenal. He's a great professor, but I don't think he wants to. It's just, he's thinking about retirement. He's like, no, I'm thinking, okay. Then you have the accounting part. The accounting is really on part 1. The key with the accounting, I mean, it's the accounting you've had undergraduate, and it's probably what you had undergraduate is probably good. They do expect you, and we'll talk about this some when we do the forecasting. They do expect you that if someone gives you a balance sheet and an income statement, you should be able to produce the cash flow statement. I don't know if you've ever done that in your career. Hopefully, did your accounting classes hopefully do that? So if I gave you a balance sheet and income statement, you should be able to back into the cash flow statement. So that's a big question on the first exam. There's not a lot of accounting after exam one. So all the accounting, I have to tell you, I'm a CPA. So I was thinking, oh, great, the accounting, that'd be a piece of cake. But actually the accounting was pretty hard for me in part one because they don't say what is GAAP accounting. They say what is wrong with GAAP accounting. So you have to talk about the things you have to fix in GAAP accounting. So that's kind of strange. Like, what do you do with goodwill? What do you do with interest expense in the cash flow statement? Those type of things. So now I don't know exactly what they mean. They're building a company financial model. That would be interesting. That I'm not sure that was in the one I did. Then you get into some of the corporate issues of, governance and combinations, and then there's an equity section. And you might find this equity section after you take this class, that probably covers 100% what's on that part of the exam, especially in part one. This class will completely prepare you for that part. I don't know how many of y'all have taken the fixed income class here. I begged and begged and begged for them to add that class, and they finally did. I don't know if it's offered this semester or not. Any of y'all know? John Tui was teaching it. Even Dr. Baynot was teaching it. But if you took that class, that would probably get you enough to handle that part of the exam. Derivatives, that was a tough part of the exam. I think we have the derivatives class at UTSA, but I don't know the last time it was offered, but that class should probably get you ready for that. You probably don't have much preparation here, but this is usually not question too detailed. I cover it a little bit in my investment class, but not in detail. But usually you're given 3 or 4 articles, and whatever's in those articles, that's what you have to learn. So there's nothing real major there. And then part 3, the very last, is the portfolio management. And this can be pretty tough stuff. If you take my risk management class, we cover a lot of the stuff there. I can't remember, I think a few of y'all took my risk class. Remember, we were doing information ratios and Sordino ratios and all the Sharpe ratios and all that kind of stuff. Efficient frontier. So there's a lot of that in there. They even have some LDI in there, which is interesting, liability driven investing. So that's the exam. It's 3 parts. Now, when I took the CPA exam, there's 4 parts. You can take all 4 at the same time and just get it done. You can't do that with the CFA. You can only take 1 part at a time. So what most people do is they take part 1 in June, and then they take part 2 the next June. And so it's going to take you 3 years. If you can do December part 1 and then June part 2, you can cut 6 months off. But I strongly recommend that you don't do, well, it's really too late for you to do part 1 now in December. But I don't like students doing part 1 in December because the exam hits the same week as finals. Versus if you take it in June, you got an entire month there to study for it. So if you're interested in a CFA exam, let me know. I can certainly give you some pointers on how to tackle it. If you sign up for the exam, you will be flooded with a bunch of CFA exam review courses. Squeezer or whoever's out there. And I mean, they're okay. I took University of Texas at Dallas. They had a CFA review session. Part 1 was really good. Part 2 was horrible. So I didn't take their part 3. So it just depends. UTSA has never had a CFA review class. We've talked about it, but I don't want to teach it. It's just, I don't like teaching exams because you have no freedom or the work around it. And then plus, I can't remember all this stuff. We tried it once with the Investment Society, and the students wanted me to teach this, and they were throwing me these articles. I was like, I got to read this article. I got to go out and, so I was like, no, I don't have the time for that. It's just, especially something like currencies. I haven't looked at currencies in years. I don't want to have to refresh that. So it's just tough, but it will open doors for you, definitely. Just saying you're taking an exam will open doors, passing part 1 will open doors, and then you just got to finish it sometime.
How much time in between you taking your CPA and then the CFA? Or did you take both at the same time?
I took the CPA right out of undergraduate.
Okay.
Which you really want to do. The CPA, you just want to get out of the way. I took the CFA was the last thing I took.
Okay.
And I actually took the CFA while I was working on my master's. So like the derivatives, I took the derivatives class. I took some fixed income classes. I took a portfolio management class. I don't recommend it because for 7 years, I had a job with a lot of overtime. So for 7 years, I did nothing but work and study. So, but when I passed the CFA, when I got that letter, it came a week early. I thought it was something else. I almost passed out at my mailbox. I was so relieved never to have to take that exam again. It takes about, I would say, two to 300 hours of study. So for the CPA exam, I think I probably studied about 200 hours and passed all 4 parts. The CFA, I probably studied 300 hours for each part.
What?
So you talk to your accounting friends, like we got the CPA. Well, I can tell you, I got them both. And the CFA took me 4 times longer to study for. Now, the hardest exam is the FSA. It's the actuarial exams, no question. But the CFA is definitely more difficult than the CPA. Is someone else, Bond, you have a question?
Are all those bullet points below there, is that for part 1 of the CFA or all 3 parts of it?
It's all part 3, all 3 parts. In fact, there's no portfolio management on parts 1 and 2. That's all part 3. Ethics is on all 3. And then quant methods, economics, and accounting is almost entirely part 1. And then the equity and fixed is part 2.
Okay.
And derivatives and alternate, and it depends. Something can be part 2. There's some overlap between them, but they tend to be more part 3 as you go further down. But the ethics is in all of them. And they just started saying, again, I hate the ethics. Whoever's writing those questions, they're just trying to show off for who can be the most ambiguous. But you have to pass the ethics to pass the exam. And yet the ethics questions are just absolute disaster. They're horribly written.
Professor, I got a question. I remember I registered for the one in June, and I was like reviewing, and some of like even the questions in the quantitative risk section, it spoke like about parametric VAR and stuff, like things that we were already sort of introduced. Do you think that like 300 hours is sort of, if you didn't have like no prior introduction to those concepts or baseline?
Well, I tend to overstudy. So part 1, I studied 300 hours, but when I left part 1, there was no doubt that I had passed it. They had just started doing multiple choice that first year. It was half multiple choice, half essays. When I left in the morning, I was pretty confident. That was the essay part. I think I got like 90% of the multiple choice done. So I thought part 1 was actually pretty simple. But I'm sure glad I studied 300 hours per part 2. That was a tough exam. I had the Black-Scholes formula memorized, and I was actually using it on the exam. I mean, that's the kind of stuff they're asking for. So yeah, I think part 1, it's possible because you're in college, it's fresh in your mind. You could probably get away with, 15 hours a week for 2 months or something. I think it's possible. If you have good classes, if you're taking the classes that are going to help you with it. Now, some students ask CFA versus the master's. I would say neither until you get your first job, unless you really want to go on the investment side. I would say if you're unsure, I would get part 1 done as fast as possible because that will even open up doors on the corporate side. I would definitely wait on a master's until you have at least 2 or 3 years of experience. Now, I've had some students with GPA problems. I have international students that need more time. Those are times where, if someone has a 2.0 GPA, then yeah, go back and get your master's and get serious and get your GPA. And plus, their master's program, they almost never give C's, so you're going to get a 3.0 or higher anyway. You don't recommend. So, figure out where you're going to be. The nice thing about the CFA is it doesn't matter where you are, you got to do the exact same exam. Versus for a master's, you don't know if you can be fixed income or derivatives or equities or corporate. And so you're going to be taking your master's program, which is a lot of busy work, and you don't know where to focus your attention. So I'm a very strong proponent. Wait at least 2 or 3 years before you get your master's. All right, so you can see that you just go to the cfainstitute.org. I think you can become a member of the San Antonio CFA. I don't know exactly what the rules are there. I can check on that and see. John Keaton runs all of that, and he hired a student right out of this class last year. Had a student in this class last year who was having a tough time finding a job, but he did a really great paper. So I emailed John and said, you should hire this guy, and so John hired him. So he works in a firm here locally in town, and he runs the CFA. He's president of the CFA Society here in San Antonio. So I think you can join and go to their meetings. Unfortunately, because of COVID, it may not be as valuable today as it's been in the past. So you might decide not to do it for that reason. All right, so there's the CFA. So here's their Code of Ethics. So they talk about the purpose of what they're trying to do. They're really trying to make this industry as clean and pristine as possible. I do like there's certain things that they hate and they actually fight against, like equity-linked annuities that I talk about in my life insurance class. I hate that product. I think it's a horrible product. They actually have written papers arguing against that product. So I'm glad they seem to take the right side on some of these controversial issues. But as a CFA, you have to act with integrity, competence, diligence, respect, integrity in profession and the interests of the clients above your own personal interests. Use reasonable care. I mean, they kind of keep repeating this diligence thing. So they'll make sure, and this is key. I talked about the sell side and the buy side, but this applies to both sides. Even on the buy side, where you're managing money, you know, you're not publishing reports for the general public or for your clients. Even on the buy side, every bond, every stock you buy, you've got to have justification for it, and you got to make sure your opinions are not tainted, that there aren't conflicts of interest. One of the reasons, if some of you want to work on the investment side, one of the downsides is it really can restrict what you can do with your personal portfolio. When I became head of equities at UTSA, I just stopped trading entirely. I used to be a really active options trader. And once I got that job, I just stopped trading. The compliance people said, oh, it's a really easy process. And I told them it's easy for you because you do it every day, but it was a complicated process. And if you mess up, you're fired like that. We actually had the fire guy, and I really felt bad about it. It wasn't because he was doing anything dangerous or harming anyone. He was just sloppy. He just forgot to turn in a piece of paper, and they fired him. He was a great employee. I really regret that. I wish I had actually fought for him, but I had just joined the committee. My first day on the committee, it's like, we got to fire this guy. I go, oh, great. This is the great first day on this committee. But they take this stuff seriously. Things like front running. I don't know if you've ever heard of front running. But you know you're going to buy 1,000 shares of this for your client tomorrow, and you think that's going to move the stock price. So you buy that stock today. That's front running. That's illegal. That will actually get you in trouble. Inside information, is that legal? It depends. But they talk about that here. Material, non-public information. You notice there's a word there, material. It is illegal to use material non-public information, but it is perfectly legal to use immaterial non-public information. Now, how do you know which is which? Well, that's up to the judge to decide. So I wouldn't make the decision, oh, it's immaterial. And in fact, if you remember Martha Stewart, remember her court case? It was a non-public information issue. If I remember the case, I'll have to look it up again, but I remember the case, they actually decided that she traded on immaterial information. So she actually didn't break the law. I think where she got in trouble was for lying under oath. So I have to go back and look at, that's my memory of it, but it was a non-public information case, and I think they said it wasn't material. You can also, if you have 1,000 pieces of immaterial information that together are material, you can trade on that. So if the individual pieces are immaterial, but combined it's material, that's still legal. So what I recommend is if you get inside information on a company, just call your lawyer and let your lawyer decide. That way she can go to jail for you, and you say, hey, she told me it was okay. But really, what do? You just don't trade on it. I mean, think about Martha Stewart, very wealthy woman. What was that trade worth? A few $1,000s? Someone so Google it for me. Wasn't it just a few $1,000s? Here's this lady with all these millions, and she's going to go to jail for something that was so immaterial. So you don't want to risk it. You just don't trade on it. So you see the word integrity a lot of times. And then they get into the details, professionalism. You got to know what you're doing. You need to be independent. You can't misrepresent. You can't break the law. Integrity. Can't use non-public information. You can't try to manipulate markets. So that one's interesting because obviously that's what's going on with GameStop and EMC, but those aren't CFAs. But can a CFA talk up a stock if they want to? Certainly that goes on all the time. So what exactly are the rules? So especially with the dark pools and all these kind of things we hear about, these after hour tradings and these fictitious trades that go in to try to move the market. What are the rules there? I don't know those rules because I'm not in that world. I don't worry about that. So I don't have to learn those rules. Your duty to your clients. So
Sir,
the CFA, you have to put your client before your own personal interest. Someone have a question?
Professor. Yes. So going back to the manipulation of market, say that Elon Musk was a CFA, would he be in jail?
He got himself in a lot of trouble. Some of the stuff like non-public information, that's illegal for anybody, whether you're a CFA or not. Some of the stuff only applies to CFAs. I think he got himself not in trouble going to jail, but he could have gotten himself fired. He could have been banned from being CEO ever again. You know, the SEC has quite a bit of power. So they certainly could have done some stuff to him. He does some stupid things, but I don't know how much of it is stupid or him doing things that are intelligent, knowing he's going to get in trouble, but then after the fact, it's going to help him. You know, I don't know how conniving he is. It's hard to tell, but certainly doesn't make sense.
Thank you.
So got to put your client first. You got to deal fairly. Now, this is an issue. If you got to trade 1 million shares, but you can't trade them all at once, and you're trading for 20 clients, what order do you do them in? You do every client in proportion. And there are times where you can put one client ahead of another client, but you have to watch those rules. My first day on the job in the investment company, Stephanie showed up with 2 massive books. I tell you, they were that thick. She drops them on my desk and they just make this loud noise. And she says, "Here's your compliance procedures. You got to comply with everything in these 2 books." And I told her, there's no way I'm reading those 2 books. So I just said, okay. And Stephanie is the best in the business. I don't think I've ever met anyone that knows her job the way she did. In fact, she used to visit other firms before we could do business with other firms. She had to go do the compliance check. And these other firms were actually taking notes from her review to fix their process because she found stuff they didn't know they had a problem with. So I just said, "Stephanie, you know what? I'm not going to read all of this. You just tell me if I'm getting close. If I'm on the border." I had one write-up where they sent it to the board of directors, which was kind of embarrassing. I traded 50 options and I was only supposed to trade 49. So I was 1 contract over and she wrote me up for that. And I was like, "I rounded up." She said, "You can't round up. You can only round down." I said, "Okay." So I got a letter. I didn't get fired, but I got a letter written up for me. I had to undo the transaction. Fortunately, there wasn't any loss or anything. So yeah, but so you have to know these rules and it's tough. So it's the frustration of being an investor. Now USAA, the investment company there, after I retired, they let up on some of those rules and it wasn't nearly as difficult. Now, one thing I could do, I could trade my 401k plan all I wanted to. So they didn't restrict me that. Now, what if I had an uncle and he sent me his portfolio and say, "Hey, I know you can't trade your portfolio, but will you trade my portfolio? Do you think that would be legal?" And absolutely not. I couldn't do that either. So you can't trade your portfolio. You can't trade your family's. You can't call your uncle and say, "Hey, we're about to buy 1 million shares of Apple tomorrow. It's probably going to push your price up 30%. You know, you should do a few option trades today." The SEC will figure that out and track you down. So the GIPS standards for performance presentation, how you can actually report your performance, confidentiality. You have loyalty to your employer. You got to be careful how you're paid. Boy, I tell you, UT Austin, I was a UT Austin grad. They were in the Rose Bowl with Vince Young. Y'all probably don't remember that. You might not even been alive then. They were in the Rose Bowl with Vince Young. One of the firms I dealt with say, "Hey, Ron, you want to go to the Rose Bowl? I can get you in for free." And I said, "Wow, that sounds really, really good, but it's illegal. But that sounds really, really good." I have people invite me to Super Bowls and baseball. I don't care about baseball, so I don't think I would go to the World Series. But I mean, you can't do any of that stuff. Can they give you a lunch? Yeah. Can they buy you a pen or give you a T-shirt? Yeah, there's limits. I forget what the limits are, $100 or something like that. So I'm not saying you can't have any fun. So you can go to investment conferences, and investment conferences are fun. I got a really good umbrella there. They give away like ounces of gold. So those are fun. You go to those, but there you're not really beholden to anybody. But you got to know these rules, and they can be pretty intense. Your due diligence, again, all your recommendations, and that's what our paper is all about. All of your recommendations have to be supported. So you need to make sure at the very end of your paper, you're going to say, I recommend a buy or a hold or a sell on this stock. That needs to be supported. There's things you have to tell your clients. There's rules about record retention. At USAA, we got audited by the SEC, like every investment firm. And they do these audits where they go into your files. And they say, okay, you bought this stock 4 years ago. Show me the write-up on this stock. And you better have it. Now, back then, it was all in paper. It was a mess. We had this massive room, which is file cabinet after file cabinet. I think today it's probably all electronic. But yeah, you have to have that. Conflicts of interest, again, you have to watch out for that. There's where I talked about the priority of transactions. So you got to make sure you're doing it in the right order so that it doesn't cause someone to lose out versus another one. And then the last thing, just you as a CFA, and this is where I talk about the reference to the CFA. Don't stick the letter CFA on your resume without reading specifically what to do. Now, this won't tell you how to do it. However, there's another document that's many more pages. Y'all see how many pages that is? 294 pages. So it's the same thing, but with a lot more detail. And what I didn't realize when I took the exam is a big part of this is at the very end of this. Let me jump down to the end. Is I have a bunch of case studies. Let's see if I can find a short one just to give an example. Jed Davis has developed a mutual fund selection product based on historical information. He tested this methodology by providing it retroactively, plus producing simulated performance. His employer decided to offer the product, and Davis began promoting it through trade journals. The advertisements included the performance results from 96 through 2003, but did not indicate that the results were simulated. Well, you know off the top of your head, you can't do that. You can't present simulated results and not say they're simulated. So you already know the answer on that one, right? So he violated by failing to clearly identify simulated performance. I gave you an easy one. You're saying, well, professor, how did you have trouble with that exam? But there's some hard ones in here. Here's another one. Circulated performance report. So here's the GIPS standards. Returns are not calculated in accordance with requirements. However, because the composites are not asset weighted, so you have to be real careful. I mean, these rules are so precise. What if you have a client that says, okay, I'm one of your clients, but you know what? I don't want you buying any energy stocks. And so you don't buy any energy stocks, and energy stocks shoot up 40%. I know that'll never happen again, but let's just pretend they shoot up 40%. And so that client had horrible performance. And so you report your performance in public, but you leave that client out. Can you do that? Well, as long as you do that every year, you can, because they're very different. But if you didn't leave them out last year, you can't leave them out this year and say, oh, well, they don't let us buy energy stocks, so we can't. So yeah, you have to leave. You have to leave them out if you left them out last year. You can't hand pick. So if their restrictions are so restrictive, then you can leave them out. but you can't handpick them. You can't make one decision over another. So, so those are the kind of things you got to, but look at all these pages you got. I mean, it's crazy, crazy, crazy details. So what I would do if I were you is I would be reading through these really carefully. And the one we just saw with that one where you can't report simulated results, say, well, that's pretty obvious. There's no reason to take notes and write that down. So the obvious ones, skip them and then find the more difficult ones and focus in on them. All right. This is out there on Blackboard. I don't know if I got their latest one. I don't know how often they change them. So, and a lot of times the answer is call your compliance department, call your lawyer. That's pretty easy. Kind of passes the buck on somebody else. So, all right, so that's what we're after. We have some standards here we have to follow. This isn't just willy-nilly, do your own thing. And the CFA, its #1 role is ethics. It's to make sure this industry is trusted, that the SEC trusts the industry, that your clients trust the industry. This is, I don't know if there's a really famous article called The Market for Lemons that you should have covered maybe in an audit class or somewhere. I don't know how many of y'all read that article. Extremely important article. It's the basis for things like the CFA and the CPA and audits and those kind of things. So I don't know if I recommend that article, but you might Wikipedia it and just read the Wikipedia of it. What happens to an industry where no one trusts it? And you end up with an industry with nothing but bad apples, because the good apples can't make money. No one trusts them. It's like a used car salesman. Good used car salesmen can't make money because the bad ones are so bad that no one trusts them. And so, so the CFA is out there to create trust of our industry so that we can do our jobs well and not have to worry about the unethical players bringing us down. All right. So I'm going to jump over, unless y'all have questions, jump over to our class notes. So our class notes are out there on the Blackboard, under class notes and handouts. So any follow-up quick questions on your company? I mean, I don't want questions like, is Apple okay, or is this okay, but a more generic question about company selection. Are there any of those out there?
Professor, I was gonna ask. So, you said they can't have like negative net income for like most of the years,
Right.
So you would want us to check that before sending you the email, right?
Well, I'll check it on Sunday. So if I notice it, I'll let you know. But it would save you some time. That's why I say go on to Capital IQ. Capital IQ will bring in every year they have. And you can just quickly look and see if their net incomes are negative or their net worth is negative.
Okay.
So if you, and I really want y'all getting in the Capital IQ because it really is important for you to learn. So this is a good chance to learn it. And I'm pretty sure you'll be using Capital IQ in this semester. So go ahead and learn it now. So that'd be a good thing to do. And Capital IQ is really fast. Once you put the ticker in there, there's just a button that says download everything. You can do 3 companies probably in 3 minutes. I mean, this can be really fast. Any other questions?
Thinking about doing a natural gas company. Would that be too difficult to do?
Like an El Paso or something?
OKE.
Just, I mean, it's just going to depend on the, natural gas prices are down so low. Just make sure. Now, if it's a utility, it's probably okay. If it's a producer, might not work. So just look at their financials and see. Like I would probably not do an El Paso gas because it's such a struggling, some of these companies have really been struggling. And it's pretty amazing how low natural gas prices are. And you just have to think that's a pretty big negative for that industry. And that's also a pretty difficult industry too. So, if you don't have a background in it, just be ready for some pretty heavy jargon. But one thing, Anthony, if you do a company like that, let's say like Exxon or Chevron, make sure you go to the company website, because firms like Exxon and Chevron and pharmaceuticals, they will often have an incredible PowerPoint presentation on their investor services. And that by itself might might give you 90% of your story that you need to tell in the paper. So I know Exxon, I've seen some of Exxon's, and if Exxon doesn't, go to British Petroleum. Try another company that's big like that, especially companies that have really bad reputations, like the energy companies. They tend to really focus on that. And energy is so complicated that there's a lot of free educational stuff on their websites. And you can copy and paste charts from those PowerPoints into your paper, and they look really, really good. They're very, very professionally done.
All right, thank you.
Sure. All right, so get out to the UTSA library. This link right here, I'm going to see if I can get into this link before I show y'all, because she may have shut it down. I'm not real sure what Natasha has done for us, but let me see if it's still there. Yeah, it's still there. All right, let me show you this. So Natasha in the library, I don't know if y'all know Natasha, I can't remember her last name. Really great resource. We're very fortunate to have her. She set up this website for us, and I gave you the link there, and it's for paper one. So here's your paper one, a really good research. She took all of those databases on the UTSA library, which is just hundreds of them, and she linked the key ones that she thought were most important. And she has all this stuff over on the side. See that Porter's 5 Forces? You're going to be doing that in your first paper. Value chain, that's something that I highly, highly recommend. Statista, boy, how many of y'all use Statista? I bet some of y'all have done that. Any Statista users here? Now, I just showed you the CFA ethical standards, and you got to make sure that you're confident in the data. I'm going to give you a little fluff here. Some of Statista's data may be contain errors, but if it's on Statista, you can use it, even if there's a chance it's bad data. All right, well, we'll be a little sloppy in this class just because I know you're desperate for data, but Statista is wonderful. Boy, I'm a huge fan. So I had a student, sorry guys, call me. Boy, we've gotten really.
Thank you.
Do y'all have to do that too, or is that just me?
Yep.
Yeah.
Boy. All right, see if it gets in there, but
Professor, you saying we have access to the library?
the UTSA library, yeah, just online. And that site I just gave you, it's linked in the class notes. It takes you out to that industry research page that Natasha set up for us.
Got it. Sorry, I misunderstood that. I thought you were referring to the physical library, JPL.
No, get online. So here, is Natasha's name on here? I don't see her. There she is, right there. Natasha Aguirre. If you contact her, I think she'll talk to you. I've never contacted her. She's very aggressive on making sure students have what they need. She's like the perfect librarian. She understands the value she adds, and she works. You can, compliment her, and then she'll love it. And librarians are often forgotten out there, and she's out there trying to help you with your career. This isn't just for you writing papers. This is so that you know what this stuff is. This is part of your job as a student, is figure out where is the data, how to get access to the data. Oh, MarketLine, IBIS World, Statista, all these things. You need to know these things are out there. What do they do? What data do you provide? What's in Bloomberg? What's in Capital IQ? You really, really need to have all of this knowledge of where to go. And so this class will help you with that. So she's got Statista. I had a student that did I forget which company, but maybe AMC. You just type in movie tickets sold for kids, movies in North America, distribution of movie ticket sales in North America by ethnicity, most successful kid movies in North America 2020. I mean, it's crazy. Coronavirus precautions affecting consumers visiting reopened movie theaters. I just typed the words movie tickets, and all this 977 things came up. And when you click on them, you get these wonderful charts. It really is just amazing. These great charts that you can put into your paper. And some students say, how do I source it? And I'm fine with you sourcing it as Statista if you like, just like they have here. So if you source it and you have that at the bottom, that's good enough for me. Now, I don't think Statista put this data together. I think they're getting it from other sources, but I'm fine with just doing that. But here they show number of tickets sold for kids' movies in North America. And you can see COVID's impact right there. But what have movie theaters done? I mean, movie theaters are getting crushed, but what's Disney doing? They're putting them online before they go into the movie theaters. So that's a big question. If you were doing a movie theater, is COVID-19 a one-time thing? We're going to go back to normal, or has something permanently changed here? And then you have Netflix producing original production programs and even getting nominated for Academy Awards. I mean, the world is radically changing. So, great chart. This is a great chart right here if this was your industry and you're interested in kid movies. So anyway, just put it as a PDF and all this kind of stuff. You have stuff down the side, forecasts and surveys, just all kinds of stuff there. So I love Statista. MarketLine, I absolutely recommend you do MarketLine. You might start with MarketLine. Well, I would start with the company's webpage. So let me just tell you right here, and we'll get into this later. The very first thing I would do is go to your company's website and download their annual report and start reading the business description portion of the annual report. All right, start with that. Very, very, very important. That will help you a lot. That business description is usually really quite valuable, usually well written. It depends on the company. So MarketLine, what MarketLine does is well, let me find a company here. So let's do Exxon. I haven't been in this site in a while, changing it. So let me type on companies and see if I may have to give up on this because I hate doing this in the middle of the class. So you have to play around with it to find it because it's not as user friendly as you would like, but once you find it, it's really quite exceptional. And so what they'll do is they'll have these, you can plug in the company, and when you plug in the company, whatever finally comes up, they'll have an industry report available in a PDF that you can download. So if I type on Exxon, they will link the industry report that most closely aligns with Exxon. And if you click on that industry report, and I don't know why it's not letting me, let me do it. Yeah, it's just not.
Professor, I have a question for you. To what extent can we rely on third-party source when it comes to a company's, I guess, information? And what are the key things that we can look out for that'll be kind of like red flags in terms of, something we might want to stay away from?
Well, we'll talk on the company. If you use the annual report, you have to realize the annual report is a very biased document. So I don't want phrases in there like Exxon has the highest quality workforce in the industry. I mean, how do you know that? If that came out of the annual report. Now, if you get a Business Week report that says based on XYZ company analysis, Exxon has the best, highest quality workforce, then you can use it. But it's an outside source, it looks reputable. For our classes, if it looks reputable, I'll let you use it. In real life, because of the CFA standards, you have to do a little checking. You can't just, because you see something on the internet and just use it. So, but for our purposes, I'm going to go with just, if it looks reputable, you can use it. Beyond that, I'm okay. But be real careful that you don't overly rely on management and management speak. And that is a problem some students have. So if a student picks Exxon, they suddenly become an Exxon advocate, and that's not your job. Your job is not to sell Exxon. Your job is to do an honest, objective assessment of Exxon. So if at the end of the class you think it's a horrible company and you put a sell on it, that's what you got to do. So be careful not to become captured by your company. And I do see that somewhat. And I don't know why this thing's not. Well, you can see, let's try IT software companies and just see if we can get something to come up here. Let's try Microsoft. Let's see what it's letting me have. So this is, let me click on analysis. Let me try industry analysis. Yeah, I think under the analysis maybe where I'm not finding it. Electronic medical, Japan aerospace. Let's see. Let me try this one. Global aerospace. You see that PDF right there? So global aerospace. Let me click on that one. Sorry, guys. These firms decide not just to change their website, but to radically change their website. And it's quite frustrating. So, all right, so here's a market line industry profile. There's your, well, I don't see a Porter's in here. They should have a Porter. Oh, there should be a Porter's in here somewhere. Table of contents. There it is. They have a Porter's. So here's their Porter's 5 forces. Now, I'm going to talk about Porter in quite a bit of detail probably next week because there's a really specific way I want you to do it. I have a lot of students that put these Porter charts into their paper. I hate that. All right. Number one, I hate it if you just copy and paste market lines in there, because then it's not your research, right? If you just copy and paste market line, it's not your research. The second thing I don't like about it is I don't know what it means. I can't remember if 5 is good or 0 is good, right? So I'm going to show you the wording I want you to use. I don't want you to say buying power is high, because I don't know if that means buyer power is strong, so it's bad for the industry, or buying power is weak, so it's good for the industry, all right? So I'm going to give you really specific words. So if buying power is positive for the industry, I want you to actually say that. Buying power, positive for the industry. Supplier power, negative for the industry, all right? So I don't like the word strong or weak, because I don't know if it's strong for the industry or strong for the buyers, all right? Y'all see that? And that's the reason I don't like this. Every time a student uses one of these charts, I have to go back and see, okay, is 5 good for the industry or bad for the industry? And even here, look at their title, weak and strong. Well, what does that mean? So it's really confusing to me. Then they break it down. Now, here's one other thing we'll talk about with Porter's. Buyer power, you can break it into a bunch of stuff. You can go absolutely crazy on this stuff. What I recommend you do is not every single one of these. What I'd recommend you do is look and see if there's one in particular that really stands out for you. I think this is overkill to go to this level. And you might let market line help you here. If you see buyer independence, to say, wow, that's industry interesting. Buyer independence on aerospace. Well, that's probably because it's the US government and they can do whatever they want to, right? They set the market. Buyer size, so 5 must be weak for the industry, right? You have one big buyer, the US government. That's not good for the industry. I don't know what financial muscle means there. I guess probably the US government as well, but you know, they can name their own prices maybe. All right, so don't overkill on Porters. You can really drill down farther. But you definitely have to use buyer, supplier, rivalry within the industry, substitution. Oh, I just forgot the last one, but you definitely need to have that group, suppliers, substitutes, new entrants. I forgot new entrants, rivalry, and buyer powers. So you need to have this level. And then I would pick 1 or 2 of them where you want to drill down a little bit further down, but we'll talk about this more. All right. So the key right now is just start reading about your industry. And it's a lot of stuff, right? They go into a lot of details. So just read it and take notes. If I were you, you know, you don't want to do too much copying and pasting, but I might copy and paste this to a report, put it into a Word document, and just skim through it. And if I find something I really like, I'll delete everything but that and put it as a quote, put the page number I got it off of. Although you don't necessarily have to have page numbers, but you definitely need to know. So make sure you keep track of where you got it from, all right? Now make sure you quote it, all right? So don't pull something from market line and don't quote them, or the plagiarism is gonna catch you. I had one student, boy, his paper was so advanced. He wrote it like someone who had like 40 years of experience in the industry. And I went to him and said, I don't really think you wrote any of this. I could have given him an F. I gave him a second try. I don't know if I'll be so lenient with you guys, but yeah, he was using terms that I knew he did not know the definition of. So I asked, did you work in this industry or something? No, I just found an industry. Well, I don't think you know what this paragraph means. So be careful. All right, so you get a lot of stuff. Market line, you can see how market lines are really powerful source that you can use. Merchant online, I don't like merchant online as much as like Capital IQ. My only fear is Capital IQ might go away, and I'm worried that it might have gone away. If Capital IQ has gone away, if it's not out there, then merchant online is a good backup for that. But I'm hoping we still have Capital IQ still there. Did I not is it on here?
Well, it's not on here, but I looked it up through the database library.
Right, I would recommend get that stuff as fast as you can. Get every single thing they publish on Capital IQ and get it into your Excel, because Natasha was saying she's trying to justify the expense. So prove to me you guys are using it. And so, there's a chance this stuff could go away. This stuff is pretty expensive for UTSA. So yeah, if we have Capital IQ, I might not use Merchant Online. And over here, she gives you some other links. Trade associations are wonderful. Trade associations, another bias. So Javier, to your point, if you're going to use a trade association, they're very positive on the industry. So you have to realize there's a bias to it. But still, see what they're saying. What are the key issues? What are they working on? Look at this thing she has down here. I think this is actually new. I think she just put this in here. Market line, what does it have? It has Porter-Five forces, industry surveys, merchant online, US global, analyst reports. Analyst reports are really, really important for paper 3. I'm going to show you how to get the analyst reports so you can see what other analysts are saying about your company. So, if you don't contact Natasha, I would really love it. I'm in this thing of we're not thankful enough people. I'd love it if some of y'all would send an email to Natasha and say, we really appreciate this industry website you set up. That would be wonderful. Put my name in there too, so I can get brownie points, but I think she deserves it, right? I mean, this is what we want a librarian to be doing for us. So she's got some really great stuff in here. If you do have problems, like let's say, man, I really need this data. I don't know where I can get it. You might email her and see if she's willing to get back to you. I don't know how about her interaction with professors is really, really good. I don't know what her interaction with students is, so you have to just see. But she's a real smart lady and very, very knowledgeable. She really knows this stuff really well. All right. So you've got your company's annual report. You've got things like Market Line, Capital IQ. You might start looking at some research reports. So with Merchant Online, I think they might have been the ones that bought out Investex. So I wouldn't use Merchant Online for financials, but they might have bought out Investex. So that's what you're looking for, analyst reports. CCS Merchant Online has analyst reports. So you might go with the Merchant Online to try to find a JP Morgan paper on your company and just see what they're saying. You can't use it. I mean, but it may give you some ideas on what the research, and not just for paper 2 and 3, but even for paper 1. What are the big key industries that they're focused in on? Market Line. All right, so I don't want to confuse y'all. Market Line on the industry does a Porter analysis. Market Line for the company, they do a SWOT analysis. And I don't know if I can find one or not. Let's see if we can find a company analysis here that is not in another country. Y'all know all this stuff was out there? I know Natasha gets so frustrated because you're paying all these fees when you're a student. This is what you're paying for, and are we actually using this?
I don't think I use most of this stuff until I started taking your classes?
Yeah, I don't know why we're not advertising it more because it's out there. Let me look at Walmart because well, let me see. Company analysis, that's what I want. Why doesn't it give me the, it won't let me get into these. Yeah, well, there it goes, maybe. I don't know, is it clicking it? Yeah, there it goes. Okay, company analysis. And somewhere in here, you will be able to click on it and bring it in. There's an export section. Let's see if we can get that. They do have it in Word if you prefer Word. Word would probably copy that way. If you do it in Word, you don't have to copy and paste from PDF. Well, it's in a PDF anyway. So, all right. So here's Walmart. So let me just show you the SWOT analysis. Well, no, this one didn't have one. So yeah, they do SWOT analysis, and so you'll just have to hunt around for one. Well, here's the SWOT. Here it is right here. Y'all see that? Boy, I should go over to somewhere and refresh my memory and all on this. All right, so here's the SWOT analysis. I don't know if you've ever done a SWOT analysis, but strengths, weaknesses, opportunities, and threats. Well, strengths and weaknesses are great. You have to do a SWOT analysis in paper 2. Strengths and weaknesses are great for paper 2, but here's one thing I can tell you for paper 1. Most, if not all, of the opportunities and threats are industry issues. So look at this opportunity. Shoppers in the US are now combining their online and offline behaviors. That's an industry issue. Focus on financial services. What if Walmart starts its own credit card or gets its own bank? That's an issue. What if Amazon has its own credit card? Is that going to disrupt this industry? What happens to Home Depot if Walmart starts having its own card? Intense competition. Well, obviously that's true for every single industry. Foreign exchange risk. I don't think that's a big one. I don't really think that's that big. Stringent regulations. But so you can see you got a lot of stuff here that you can draw on. Your problem's not going to be finding stuff. Your problem's going to be finding too much stuff. It's going to be a little bit overwhelming. So, look and see what they have. So merchant online is good. I'm not going to try to figure out here on the spot here. All right, so you have a lot of resources, and learn these resources so you can bring them up in an interview. Value line, I don't recommend value line much anymore. They used to have it in the library. I used to recommend it because value line, I used to have a subscription to value line. We used it a lot at USAA. I think it's becoming, and they're all electronic now, so it's possible UTSA has it electronic. I haven't looked for value line. One of y'all might try value line on UTSA library. If you do use, and I think it's good for the company analysis. I think it's far too simplified. But the one thing value line has at the beginning of each section, they have it broken up by industry. In the beginning of each section, they have an industry page that defines the industry and talks about it. And that's actually really pretty good. So if you could get your hands on that one page, that might actually be worth it. We talk about the annual report, Merchant Online, Merchant Horizon, I can't remember. Thompson one, I think, is now part of Merchant, so I don't think that one's actually its own one anymore. IBIS World, Net Advantage, and then Capital IQ. Bloomberg, if you can get access to it, it looks like if we're not back on campus, I'm going to be doing a lot of your Bloomberg work for you. If you want to be there while I'm doing that, I might get some permission to get one or two into the FNC while I'm doing that, but hopefully you'll be back on campus. These videos here, I wouldn't recommend you watch them because you have to have access to Bloomberg to be able to do them. So again, I'm going to be doing these 4 videos. I'm going to be doing a lot of this or some of this weekend for you. And I'll get that file out there for you. So you have plenty of research. So any questions on what you should be doing this weekend? I mean, number 1 is pick your company. All right, so, and if you're questionable on your company, you're not gonna be able to finalize that until Sunday night. So something you might do, if you've got 2 companies and you're trying to decide between the 2 of them, do all that stuff I just talked about, the annual report, market line, do that, get those reports in, and you might find one of the companies you're looking at has a whole lot more stuff than the other one. Especially when we talked about the analyst reports on Worksheet Online. If you can find a really good JP Morgan or Goldman Sachs or Morgan Stanley report on your company that's like 20 pages long, that might be the deciding factor. That'd be a really great resource to have. So you might let that one drive. That, you know what, I got a lot more data here on this company than the other one. So you might start collecting it. So this weekend might be just a matter of bringing as much stuff on the companies you're considering, and then go through their annual report and read the business description. So that might be your job for this weekend. The reason I recommend the business description is that if you get to the business description and you quickly discover jargon that you don't understand, that might be a red flag that that's not the company for you to do. You're obviously not going to have that trouble with a Costco. You could have that problem with an Exxon or a Monsanto. So, you know, some firms are far more complicated. That's like with a gas company. You know, you go to a utility, look at the business description, and within 2 sentences, you're already lost in what they're talking about. And so that can be a good indication. So that's why the annual report of the company can be so valuable. All right. So I'll send out an email tomorrow saying, make sure you get your company selections to me by noon on Sunday. If you don't get me your company by noon on Sunday, then you're going to be essentially stuck with whatever companies I put on Blackboard Sunday night. All right. So if I don't get a company from you, you're going to have to pick one of the ones I have out there. I'm planning right now to put all of the companies in one massive Excel file alphabetically. Last year, I made a file for each one. I had like, I think I got up to 80 or 90 companies. That took me forever to put that on Blackboard. So I'm just going to put them all in one massive Excel file, and you can just, so that's kind of good for you too, right? Because you can click through a few of them and give you some ideas of what you want to look at. I'll try to put them by company name and not by ticker, so you're not having to go out and look up tickers. But some of them, like AAPL, I'm hoping you'll know what that is, or XOM, but I'll try to put it by company name. All right, so does everybody know what your assignment is for this weekend? You don't want to get behind on this class.